Welcome to the deep dive. Today we're really getting into a big question. How is luxury itself changing? Like, what does it even mean today?
Exactly. And we're basing this on some solid research, primarily the State of Fashion Luxury Report. It's from the Business of Fashion and McKinsey and Company.
Right, and this isn't just guesswork.
No, not at all. They've surveyed over 56,000 luxury clients.
Wow.
Yeah, and analyzed like 10,000 social media posts, online content, plus they talked directly to luxury executives. They also worked with the Luxury Institute and Quilt.ai, and so it's pretty comprehensive stuff.
Okay, so our goal here for you, the learner, is to pull out the really crucial bits from all that data.
Help you understand these shifts in luxury, what they might mean,
Yeah,
without drowning you in numbers.
exactly. So let's dive in. What's the big picture? What's the market looking like right now?
Well, the immediate thing you notice is a slowdown, definite deceleration. Global luxury growth slowed in 2024, and the forecast looking ahead is for, well, more modest growth in the next few years. There are charts showing this, looking out to 2027, region by region.
And I guess it's not the same everywhere. Like, different regions are doing different things.
Precisely. You've got Europe and the U.S., still huge markets, obviously, but their growth looks different.
Uh-huh.
What's really interesting is the U.S. actually kept growing, kind of strengthening its position.
Okay.
But China, growth there has hit some bumps. And then you have places like Japan, Korea, and definitely India flagged as, growth hotspots.
Right. So what's behind this slowdown, these regional variations?
It's a mix of things, really. The economic instability in China, that's definitely hitting consumer confidence there.
Yeah, you hear about that.
It's not just about spending less. It might be a deeper shift, maybe less focus on, obvious luxury.
Hmm.
Then there's the potential hit from U.S. import tariffs. Some estimates are pretty big, talking like $46 to $78 billion less in U.S. spending per year.
That's substantial.
It is. And then aspirational shoppers, the ones just stepping into luxury, they're pulling back because of the economy. Plus, brands aren't opening new stores as fast, and multi-brand stores, department stores, they're facing their own challenges, especially with making e-commerce profitable.
Okay, that does sound like a lot of pressure pushing down. Is there anything pushing back? Any potential bright spots for growth?
Yeah, there are definitely some counterforces, or potential ones anyway. Consumer confidence, I mean, it's still not back to where it was in, say, 2021, but it is recovering a bit.
Okay.
And inflation is easing in places, which might mean more disposable income for middle-class shoppers eventually.
Okay.
Also, the number of ultra-high net worth individuals, the UHNWIs, that's growing globally. About 5% year expected through 2028.
And you mentioned China and India earlier.
Yeah, growth there is expected to be even stronger, like 8% in China, and a huge 50% jump projected for India in that same time frame.
50%, wow.
It's significant. Plus, things might pick up after the U.S. election in November. And don't forget, emerging markets in Asia, Pacific, Indonesia, Thailand, their economies are developing. Income's rising.
So potential there, too.
Definitely. Oh, and one other thing, international spending on luxury is expected to increase.
Yeah.
People traveling and buying,
Mm.
which is good, but it might actually mean less spending within some countries.
Right, a bit of a balancing act there. Okay, so a really kind of complex picture overall. What about specific types of luxury goods? Are some areas doing better than others?
Yeah, the forecasts point to leather goods and jewelry as the likely leaders.
Okay.
They're expected to grow maybe 4 to 6% annually between 2025 and 2027. Leather goods are seen more as like investment pieces now,
Interesting.
and jewelry's attracting a younger, more diverse crowd. Watches, though, luxury watches, might face a tougher time. That market seems to be shrinking a bit.
Okay, this is where I think it gets fascinating. The shift in what customers actually want and expect. That seems to be changing quite dramatically. Let's get into that. Price, first off, price sensitivity.
This is really key. It looks like brands are hitting a ceiling with price hikes. Across the board, really. Meaning customers aren't just automatically accepting that a higher price means better quality or more brand value anymore.
They're questioning it.
Exactly. The social media analysis showed people are pretty vocal about this, especially, it seems, in the UAE, where they feel prices are unfairly different compared to other places.
Okay, that makes total sense. If the value isn't perceived, why pay more? What else are customers looking for now, beyond just the price tag?
Well, there's a much stronger demand for, like, real innovation. and for the actual quality of the product.
The materials, the
Yeah,
craftsmanship.
exactly. The intrinsic stuff. People want novelty, yes, but also that inherent value, great materials, design, how it's made. If brands don't deliver on that, loyalty is definitely at risk.
So the name alone isn't cutting it anymore. The report also mentioned this trade-off between goods and experiences.
Yes. This is a huge trend. People are increasingly choosing to spend on experiences, travel, health, wellness sometimes,
Yeah.
instead of buying another luxury item.
Time is the ultimate luxury kind of thing.
That's exactly the feeling. Investing time in an experience feels more valuable than just acquiring another thing. And the pandemic definitely accelerated this. Travel, for instance, isn't seen as purely discretionary for many in this group anymore.
And I suppose that feeds directly into the rise of the secondhand market, people looking for value, maybe unique items.
Absolutely connected. Value is a big driver, yes. People are turning to pre-owned for affordability, but also for uniqueness.
Right.
The online conversations show that about a quarter are driven by wanting something unique with history,
Yeah.
and another quarter, roughly, by the price point.
But there are issues too, right? Authenticity.
Authenticity is a major concern, yeah. Comes up in about 20% of those conversations. And how people feel about resale, it varies a lot by region.
How so?
Well, it's pretty established in Japan and France. It's growing in China, though there's still maybe a bit of stigma. But more skepticism in the UAE.
And the U.S.
In the U.S., lots of people have tried it, like 1 in 3 luxury customers have bought or sold resale. But, and this is a big but, almost half had a negative experience.
Oof. Why?
Concerns about whether items were real, the quality wasn't as described, selling was difficult, or just not finding what they wanted. So, lots of potential, but hurdles too.
Definitely a nuanced picture. Okay. Last point on customer values. Ethics and sustainability. How important is that becoming?
It's definitely growing in importance. Half of luxury clients globally say sustainability is extremely important.
Half.
But, and here's the catch, there's also a lot of skepticism. People aren't always convinced brands are truly ethical in their manufacturing.
Accusations of greenwashing.
Exactly. Brands talking the talk, but maybe not walking the walk. So while sustainability might not be the only reason someone buys something, a perceived lack of ethics can really damage that luxury promise, that trust. Aspirational shoppers in the US and Europe, they have pretty clear ideas now about what they expect.
Okay, let's shift gears a bit. How is all this translating into the actual shopping experience? The report suggests there's maybe a disconnect there.
Yes, a significant one, it seems. A concerning number, like 43% of people surveyed feel the in-store luxury experience hasn't improved. It's just stayed the same.
Which isn't great in luxury.
No. And worse, 21% think it's actually gotten worse.
Ouch. What are the main complaints?
For aspirational clients, the big friction points are poor after-sales service, what happens after you buy,
Yeah.
and just feeling like the service is impersonal.
Impersonal service. That feels like the opposite of luxury.
It really does. So bridging that gap is crucial.
How can brands do that?
The report really emphasizes the need for the human side. Using data smartly, yes, but using it to personalize the interaction, make recommendations feel genuine.
Not just creepy data mining.
Right. Making it helpful. Things like omnichannel stock transparency are important, so a sales associate knows immediately if an item is available anywhere.
Yeah, that's frustrating when they don't.
And using platforms like WhatsApp for clienteling, staying in touch. Marriott had an interesting take. Use AI to smooth things out, remove friction, but not to replace that personal connection.
And that connection needs to continue after the sale, you mentioned.
Absolutely. That post-purchase phase is key for loyalty, but often overlooked. Brands need to really revamp after-sales systematic follow-up, offering repair services that are actually valuable and efficient.
Make people feel cared for long term.
Exactly. And beyond just service, brands need ways to, inspire and entertain clients, both in the store and online. Keep things fresh and engaging.
Okay, so pulling all these threads together, this points to some pretty major strategic things luxury leaders need to be thinking about. What are the main imperatives?
The report lays out 5 core ones. First, future-proof the portfolio. Look hard at which categories and regions you're exposed to. Think about expanding into related areas, maybe like travel or hospitality. We see examples like Equinox or Marriott doing this.
Yeah.
Maybe even consider smart acquisitions to build resilience.
Makes sense. What's next?
Second, rethink the target customer and really tailor the products. Ensure the brand feels consistent everywhere. Product, experience, price. Build that emotional connection. Inspire people with design and marketing.
Okay. Third.
Evolve beyond just goods. Acknowledge that shift towards experiences we talked about. Maybe broaden the portfolio, like, again, Equinox moving into wellness, Marriott into cruises.
Got it. Fourth imperative.
Tackle those retail experience problems head on. Implement specific fixes for both in-store and online, focusing hard on personalization and that crucial after-sales care.
And the fifth.
Reinforce ethical craftsmanship. Keep evolving production practices so they actually align with the luxury promise and meet those rising customer expectations on sustainability and ethics.
Okay, those are pretty clear directives. Let's make it more concrete. The report mentioned Prada and Piaget as examples. What can we learn from them?
Right, Prada. Their focus seems to be heavily on retail execution, building those customer relationships. They really stress the importance of the in-store experience, making the brand feel alive.
Okay.
They acknowledge challenges like in China and what they call hyperinflation in leather goods prices. But their core strategy is about credible products and unique experiences, not alienating their loyal base.
And for independent companies like them?
They emphasize needing good ideas, speed, and really close relationships to compete with the big conglomerates.
Right, agility is key. And
Yeah.
Piaget, what's their angle?
Piaget's been focusing on bringing back their core DNA, their heritage. They talk about extravagance. The relaunch of their Polo 79 watch was a big part of that.
Okay.
They're also emphasizing craftsmanship, doing things like in-store workshops. They seem to believe the current downturn will pass, and they feel less overexposed to China now. Direct-to-consumer retail is important for them.
Interesting.
And they actually see the rise of new, smaller micro brands as kind of healthy for the market overall.
Mm.
Their big worry, though, is getting caught up in short-term fashion trends. For hard luxury, they believe the basics are timeless. Passing value down generations, long-lasting products, creating value, and sparking desire.
So really focusing on the long game. Okay, let's try and wrap this up. If you had to boil it down, what are the absolute key takeaways from this deep dive?
I'd say first, the luxury market is definitely in a state of flux. Slower growth, yes, but also these really significant shifts in what customers value.
Price sensitivity, quality, experiences.
Exactly. Price matters more. Genuine quality and innovation are crucial. Experiences are competing hard with goods. The secondhand market is booming, and ethics are increasingly on the radar.
So what's the bottom line for brands?
They really need to adapt strategically, go back to their core value proposition, significantly improve the entire customer experience from start to finish, and look seriously at growth beyond just selling more traditional luxury items.
Okay. And as always, we leave you with a final thought to chew on.
Given everything we've discussed, the huge value placed on experiences, the rise of resale, what does true lasting luxury even look like in the 21st century?
And how will brands have to redefine what they offer beyond just the physical object to stay relevant? Something to think about. Thanks for joining us for this deep dive.